Welcome everyone to our live Q&A session. My name is Natalie and I am here with Dmitriy, who will be answering all of your self-directed IRA questions and Solo 401k questions. A lot of you have sent in questions, so we will jump into answering them. If there are additional questions, please feel free to type them up into the Q&A chat area, and we will try our very best to go ahead and answer all of them. If we don't get that chance, as an alternative, I would love for you to register for our next live Q&A session, which will be on May 22nd at 11 a.m. Pacific Standard Time. So if you can make note of your question, just go ahead and type that in once you register. But before we get started, I'm going to give a brief introduction about Dmitriy. Dmitriy is the president and the founder of Sense Financial Services, LLC. We are a boutique financial firm that specializes in self-directed retirement accounts with checkbook control. He began his career back in 2000 in financial planning and real estate investing. He is a licensed California real estate broker, a real estate investor, and a private lender. He has taught hundreds of investment and financial planning seminars, and he's mentored thousands of investors. So welcome, Dmitriy. Thank you for taking the time to answer all of our questions today.
Thanks, Natalie. It's good to be here with you, and looking forward to another productive session. So let's jump in.
Yes. Okay, our first question is from Daniel. What is the difference between Solo 401k and the checkbook IRA? Can they both use a checkbook?
Good question, Daniel. So in a nutshell, an IRA is individual retirement account. Anyone can have an IRA. If you have existing retirement account, you can set up a checkbook IRA and move it over, or you can also make contributions. You have to have earned income to make contributions. A Solo 401k, on the other hand, is a employer sponsor plan. So you must have a sponsor of the 401k. And to do that, you have to own a business or be self-employed. A Solo 401k designed for those who are small business owners without full-time employees, so you can't have any full-time employees working for you. But yes, they both offer you the ability to control your retirement funds with the checkbook.
Great. Next question is from Cynthia. Is there a way to convert a Solo 401k from one based on self-employment to one not based on self-employment?
Cynthia, as I just mentioned, Solo 401k designed for those people who are self-employed or own a business without full-time employees. And if your self-employment ceases to exist, then you can convert that to a self-directed IRA. But to maintain a 401k, you can have a Solo 401k unless you're self-employed. It can be converted to an IRA, but if there is no more self-employment, you will have to terminate the 401k plan. But it would be best to actually call me and talk about your specific situation, Cynthia, if that's something that is a possibility. So let's talk about the specifics, because specifics do matter.
Okay, next question is from Jim. Can the IRA LLC co-invest with myself or my spouse as a passive investor in syndicated hard money loans?
Jim, you and your spouse are considered to be disqualified to your IRA. So per IRS rules, all transactions that involve your IRA, they must be arm's length, meaning that there is no disqualified person involved in the transaction. And co-investing, in some instances, it's possible to structure it where you co-invest together with your IRA, but generally we do not recommend that, because in most cases, such transaction probably be a prohibited transaction from the very beginning. And even if it can be structured to be IRS compliant from the beginning, there is a really good chances it can become a prohibited transaction going forward. So it's something that we don't recommend. But again, I'm happy to speak with you about your specific situation and kind of dig deeper into the details. Thanks for asking, Jim.
Okay, Edward wants to know more details about adding funds to a self-directed IRA.
Well, Edward, if you have a self-directed IRA, it is an IRA and the rules are the same. So how would you add funds to just a normal IRA? The rules are the same. Starting this year, limit have gone up a little bit, so it's $6,500 per year. And then if you're over age 50, then you have additional $1,000 in a catch-up contributions. So you can put $7,500 a year. But you will have to work with your custodian and contribute that funds to a custodial account, either by writing a check and mailing that to your custodian, or you probably can do it online as well. But it's something you got to work with custodian. It's pretty simple and straightforward.
Okay, next question is from Sam. Does my solo 401k become the only owner of the property after I pay off the non-recourse loan?
Well, Sam, the ownership of the property does not change with or after the fact that the loan is paid off. Your 401k owns the property now. When the loan is paid off, is not going to change. The lender does not own the property, you do. The lender has a lien on the property, so the lien will be removed, but the ownership is not going to change.
Okay, next question is from Larry. It is now time to take a distribution. Please provide exact details, such as to whom the check is from, etc.
Larry, I think your question was cut off, but I need to know a little bit more details. Are you talking about an IRA or a 401k? I can probably look up if you have an IRA or a 401k with us, but it differs depending on the type of account you have. If it is an IRA, you will have to work with the IRA custodian. So custodian will process the distribution and mail you the check. If it is a 401k, and I think you're asking about 401k. So from the 401k, you are the plan administrator. So you will be administering the distribution. And we do provide distribution form that you will fill in and have on file. And then you can simply write the check payable to yourself and deposit that to your personal checking account. Keep in mind that you are required to withhold mandatory 20% tax and distribution. Again, we provide guidance on that. And then in the next year, beginning of next year, you're required to issue a Form 1099-R reporting that distribution to the IRS. And we do provide help with all of those details. And we actually have detailed guidance for all this. Just go ahead and navigate to the client portal, and you can just do a keyword search for distribution. And all of those details are there. If you have trouble finding that, contact our office and we'll point you exactly to the right place. Thanks for asking, Larry.
Next question is from William. I lost my entire investment in a checkbook IRA. Does that mean I lost with no recourse?
Good question, William. I can't answer that question for you because I don't know what kind of investment you made with your checkbook IRA. See, for the reason most people come to us is because they want to get out of the stock market. So, for example, if you make an investment in the stock market with an IRA and the stock market crashes, you got no recourse against that. You lost your money. But with the checkbook IRA, you have the ability to invest in alternative assets, such as buying investment property or making a loan, doing a private loan. So if you're making a private loan, your investment is secured by real property. So even if the borrowers stop making payments, you have the property that secures your position. So you can eventually foreclose or sell that property and recover your investment. But without knowing what investment you made, I have no way of telling you whether you have recourse or no recourse. But the bottom line, if you made investment into something like a cryptocurrency, which in my personal opinion, that's not an investment. This is a speculation. It's like same thing going to gamble, because you've got no real value underlying there. So yeah, if you've done something like this, I don't see there's been any recourse for you. But invest in something that is has less risk. That's my recommendation to you. And if you guys have any additional follow-up questions, maybe because some of the questions you guys ask, and I want to encourage you for the future, when you ask questions, please be clear and specific if you want to have a specific answer. So some of the questions, sometimes they're a little bit unclear, but you're welcome to ask follow-up questions or new questions that you can think of in the Q&A section of the webinar. Go ahead and type your question, and we'll get to those at the end.
Okay, your next question is from Jacqueline. When it comes to recourse loans, how stringent is the bank with required profit percentage?
That's actually example of that question not being clear. Jacqueline, when it comes to retirement accounts, the loan must be non-recourse. So I'm not sure what you're referring to when you say recourse loan. Are you talking about personal loan? Because again, when it comes to an IRA 401k, it must be non-recourse. And then second part that throws me off, required profit percentage. So I'm not sure what you mean by there. But I do encourage you to email me your question or give me a call, and I'll be sure to first, I need to understand that, and then I'll be sure to properly answer that for you.
Okay, William is asking, can you borrow from a checkbook 401k at prevailing rates to help purchase a property as a bridge loan?
William, there is a feature with the 401k known as a participant loan. So if you have a 401k, you can take a participant loan from your 401k. The loan is limited to $50,000 or 50% of the balance, whichever is less. So that's a participant loan that you personally taken as a participant of your 401k. You're taking the money out. It's the terms are, it's a 5-year loan, and interest rate is set at 5%. I'm sorry, at a prime plus 1%. But your 401k cannot lend money to you as a bridge loan, as an investment. That will not be allowed. But again, you can take a participant loan.
Pat is asking how and where to buy physical silver.
Good question, Pat, but I can't give you much guidance on this because we do not offer investment advice. You're going to have to do some research on this. Go online and do some research. I personally not a fan of physical metals because, again, that's, in my opinion, it's not an investment. This is just it's a good way to hedge against inflation, but gold doesn't produce any income. So I personally don't have any experience with that. I like to invest in assets that pay me regularly, or and also appreciate in value. But you're going to have to research that, Pat.
Next question is from Sue. If I return funds from Solo 401k to Fidelity, are there any specific rules?
I also will need to ask a follow-up question. When you say return from Solo 401k to Fidelity, are you talking about you had an IRA at Fidelity that you did a direct rollover to a Solo 401k, and now you want to move it back. Also, I need to ask a follow-up question on what's the reason you want to do that, because you can have a brokerage account under your Solo 401k, even at Fidelity, and you can accomplish the same thing that you can consider in doing with your IRA or whatever account you have at Fidelity. You can do that with the Solo 401k. Or are you considering terminating the 401k plan and moving back to Fidelity? Yeah, you can do that. It will have to be done as a direct rollover. And the funds that you rolled into the Solo 401k, you have the freedom to roll them out at any time. So there is no restrictions on that. But again, I think the key here is what it is that you're trying to accomplish, because I think many people, and I see you're probably not exception. Many people they think, okay, if I want to maybe buy some mutual funds, I gotta move it back to my Fidelity IRA. That's nothing can be further from the truth. You can open a Fidelity brokerage account under your Solo 401k plan and do the same thing. And it stays under your 401k umbrella. So there's really, unless I'm missing something, there is really no advantage, only disadvantage actually moving to another account from your Solo 401k.
Next question is from Sherry. Can I transfer my IRA into a Solo 401k?
Yes, Sherry, assuming that IRA that you're referring to is a traditional IRA, you can move that, or you can, it won't be a transfer, it will be called a direct rollover. So you can move that from a traditional IRA to a Solo 401k. If it is a Roth IRA, then unfortunately the answer is no. IRS does not allow Roth IRA to go to a 401k, but traditional IRA, certainly you can. No issues there, no restrictions.
Okay, Jim is asking, can a holding company be utilized for a Solo 401k?
Jim, good question. I think I'd like to clarify that a little bit further. If I was talking to you, I'm guessing you're asking about a holding company, say, setting up an LLC for a property that you wish to acquire under your Solo 401k. Some people like to have the LLC hold the property. It's possible. It's not required. It's not necessarily needed. Your 401k can hold the property, but if you wanted to utilize a separate holding entity such as an LLC, you can. The LLC needs to be set up properly though, because your 401k will be the member of the LLC, so it needs to be set up to be IRS compliant. So you need, it's not something that you can do yourself, but certainly can be done.
Kathy's asking, what happens to your account once you turn 59 and a half?
Kathy, good question, but nothing happens to your account. It doesn't change. So 59 and a half is when you are eligible to start taking distributions without being penalized. But that's the magic age. I think you're asking about the distributions. So you'll be eligible to start taking distributions, but your account doesn't change.
Next question is from Manuel. When is the deadline for filing Form 5500?
Miguel, the deadline for filing Form 5500 is if you have a Solo 401k plan, is the end of the 7th month following the end of the plan year. Now, for most people, let me make it simple. Most people have their plan year January through December. So if your 401k plan year is January through December, then you have until July 31st to file the Form 5500 EZ. If your plan year ends, say, and that's uncommon. but we do have few clients like that. If you're, let's say your business fiscal year is October through September, and then you make your plan year to be the same per your CPA's recommendation, then you will have to count the 7 months from the end of the plan year. So it will be accordingly then. But normally there is plenty of time, and we do send reminders for that. But ultimately, you're responsible, so you want to have your own reminder set for yourself. So good question.
Okay, Carl is asking, if someone has made a private loan out of their solo 401k with the lien on a deed, would it be considered an arm's length transaction if the borrower then made a private loan to the lender, again with a lien on a different property?
Carl, what you're referring to here will be a quid pro quo prohibited transaction. So I'm lending you the money from my 401k so that you can then lend money to me personally. That will be a prohibited transaction. If you break the two separately, if they're completely unrelated, then yeah, technically that can be possible. But if they're tied to each other, then that will be a quid pro quo prohibited transaction.
Okay, next question is from Aaron. I am being enlisted to provide consulting services to a business in which I am not an owner, employee, or major director. I am to receive cash and stock compensation. Can I receive the cash compensation personally, but receive the stock compensation to my 401k plan, either as a direct grant to myself as the settlor or trustee? Perhaps the plan provides services to the company in addition to myself personally providing services in exchange for the cash component of the compensation, or by having the 401k plan purchase the stock from the company at an inexpensive price.
Good question, Aaron. The short answer is no to both of these, but to clarify and to help you understand is that there is only two ways to add funds to your 401k. Number one, you can move funds from another existing retirement plan as a director or lower. There is no limit on that. Or you can make a new contribution to the 401k. And the new contribution is always based on your self-employed earnings, and it can only be made in cash. So you can contribute stock to the 401k if you personally own the stock. So that's not possible. And then you also saying or mentioning plan provides services to the company. That's not possible either. Plan is not a business to provide services. It will be you providing the services. And again, you're committing a prohibited transaction here by mixing your plan. So that's not possible. And then the last part of the question, by having the 401k plan purchase the stock from the company at an expensive price, that will not be arm's length transaction. So you personally involved in that. And as a result, you have the ability to maybe acquire the stock. Personally, you can do that. But if you now mix your 401k into the picture, then that will be a conflict of interest prohibited transaction. So no, that's not possible.
Okay, we have a few questions in the chat that we are going to go ahead and answer. There's a question from Sam regarding the non-recourse loans. I believe we already answered that one, but the second question also from Sam. In the future, when the time comes for me to take RMD required minimum distributions from my solo 401k, do I have to sell the property that I have inside the solo 401k? The rental income is much less than the RMD.
Yeah, good question, Sam. We addressed it in the past. And the main thing that you need to understand is that you have to plan for the RMD. I don't know what your age is now, but you have to plan for that. So if you're RMD is less than the amount that the property generates in rental income, then you're going to have to liquidate the asset to satisfy the RMD. You can either sell the property and maybe exchange into something else, or another option is you can actually take the property as in-kind distribution. You can distribute the property to yourself. It's also possible to distribute a portion of the property to yourself, let's say 20%, and do it over the next 5 years. That becomes rather complicated because you're going to have to appraise the property every year, and now you're going to have to retitle the property because the ownership changes. Certainly, to take the entire property out as a distribution in kind will be fairly simple, but depending on the size, that might be not something that you'll be comfortable with. But you do have some options, and yeah, it's important to plan for that.
Okay.
Question?
Sorry, what was that?
We have a next question, right?
Yes. From Ramil, my cash value of Solo 401k is less than $250,000. However, last year I invested in an apartment syndication for $50,000. Is the investment at $50,000 the value of the asset, or is it the value of the apartment? I'm not sure which one to use for Form 5500 EZ.
Ramil, good question. When it comes to filing Form 5500 EZ, it is based on the total plan assets. It's not based on the value of a single asset, but all of the assets in your 401k, and it's not based on the equity. It's based on the value of the total plan assets. So if you have property, let's say if you have an apartment building that is worth $500,000 and you have a loan for $200,000, you might have only $200,000 worth of equity on that particular property, but the asset value is $500,000. So that puts you over the required threshold, and you have to start filing the Form 5500 EZ. And we actually recommend filing this form regardless of the total plan assets, even if it's less, because eventually you're going to have to do that. It's a good practice to do it, so you get the records established with the IRS, and also statute of limitation kicks in once you file the form. So it's a good practice to do it. You should do it regardless.
Okay, I believe those are all of the questions. So this brings our...
Yeah, thank you for joining us. Good questions. If I wasn't able to clearly answer, maybe because the question wasn't clear, you guys go ahead and email me directly, or feel free to give us a call, and I'll be happy to address that.
Yes, and we also do have our next Q&A session. It's going to be on Monday, May 22nd, 11 a.m. Pacific Standard Time. That's in 2 weeks. Don't hesitate to ask any questions that you have in the meantime, but I hope you all have a wonderful day.
Thank you for joining us. Have a good day.